You are looking at a daily chart of the Aussie, and I want to walk you through a very easy way to do some technical analysis to determine the direction of a market. Now, here we can see that the Aussie is bullish on a daily chart, okay? And the reason I say that is because let me expand this a little bit, give me a second to make this a bit bigger. Let me turn off these lines. Okay, here we go. So here's how I look at this market, okay? We've had a move down, and that move down was an attempt by the market to rebalance this gap here on the daily chart. Okay, now you can see that on this move down, okay, talk about that candle there, as it's trying to come down to rebalance that area where we've only had buy price delivery, right? Through that, we've had only buy price delivery. This down candle's job is to come and try and rebalance that. And this market would be balanced if it came down to the high of that week. Okay, which would mean, what I think about what that would mean that there is now downside price delivery inside of that area. Okay, now we can see the market was not able to do that, and that indicates strength. Okay, the market was not able to balance and deliver price efficiently, and instead there was so much strength, or the market wanted to reach for something higher, that's as far as it got, and it started to move up. Okay. And since then, we have been continuing to move up. And my expectation is that we will continue to move up. At least for now, we're just looking at today's price activity, which is this bar here at the moment. As I'm recording this video, we're going down. We have taken out the high of that previous day, okay, yesterday. And I would expect, what day is this? Let's have a look. This day here is Friday's high. This is Monday, and this is Tuesday, right? So the current high of the week is this bar here, Tuesday. Okay, so I would expect that the market, Aussie, because we're bullish on the daily chart, should reach that level right from here. It's not too far away anyway. We are already at 66.11, and that's 66.40, so it's only 30 pips away. Okay, and that is pretty close to Friday's high as well. So I would class those two highs to be so close that they are relatively equal. Okay, so that would be my target if I was bullish on the Aussie, which I am, will be the high of Friday. Okay, so essentially you should take that Friday high out, and then you would kind of expect that it would continue because there's another high up here, but we won't talk about that in this video. Okay, so that then is essentially a nice kind of a move from where we are now up to there, which is 40 pips. You might get 50 pips. We might continue to go a little bit lower. So my job at the moment right now is, where do I enter into this market? Let's have a look at a 15-minute chart. We can see that we've been going up. Okay, and that there is Monday's high. So where's Friday's high? So there is Friday's high. So that's kind of where we're reaching for, around that 66.50 mark. Okay. Now, as I said, we've taken out the previous day high just by a little bit. Okay. As you can see on the daily chart, let's actually put a line there, that previous day's high, so we can see on the 15-minute chart where that is. So that was right there. Okay. That's that previous day high that we've taken out today. Okay. So if I go back to the 15-minute chart, there it is there. We can see that it's only just taking it out. Hasn't really gone through it by any means. So I see this as a pullback, and what I want to work out is, where do I go long from? Okay. Now, typically what I would do is I would jump down to a 1 hour time frame, okay, and look for a gap, which I have already marked out there. So we can see on the 1 hour chart, there is a gap that I've highlighted there in the blue shaded area. Okay, so that could be a key level. Now, you can see that is a gap because there's only been one-sided price delivery. Okay, one-sided buy price delivery. Now, this blue line is the high of the previous day on a daily chart. Let me just show you that. So there it is there. Okay, that's what that blue line represents. So that's another point of interest for where the market may come back into. Okay, and that's what is represented on that lower time frame chart. Okay, you can see that's the current day, and we are retracing back to the high of the previous day, and we may get down to that hourly chart gap. Okay, so that there is the high of the previous day, and that there is the gap shaded in the 1 hour chart. Okay, so that you know you have those reference points when we're looking at a lower time frame chart. Okay, so there's the gap you can see in the hourly chart, and you can see that is where the breakout traders have got in, and so I would like to see the market go down to that for a entry setup. Okay, but I don't think that we are going to get down there. Of course we could. I also don't expect that entire gap to be filled. I just want to see it come in there and move away quickly, because that will indicate strength. But I do think that 66, which is that high of the previous day, will be a key point of interest for the Aussie. Okay. Now, I also want you to look at this candle, which has a wick Okay, and what I like to do is I like to measure the that range of that wick. Okay, so I'll take the closing price of that bar down to the low, and I'll add on a tool that allows me to measure the range of that. And what I don't want to see is that wick traded down into below the 50% retracement. Okay, so I want to kind of see the market, if it is coming down to that wick, I want to kind of see it remain above the 50%. And what I will typically do is just put a line on there, so there's not too many lines on my chart. I'll just mark it where the 50% is, and then I'll just make sure that it's the exact coordinate, because that's important. Okay, and I'll just label that as midpoint. Now, what's important is that while the market can go through there, I want to see it just come into there, tap into there, and just move away as fast as possible, because that to me then indicates that market has strength. Okay, so that line represents the 50% of the wick, and that there is the high of the previous day, and then we also have that 1 hour gap down below. So the market can come in to any of those levels. What's important is time. At what time does it do that? Is it going to do that in London? Is it going to do that in New York? But we have 3 levels now that are key points of interest for us, where I do believe the market will reverse from. And what will determine the correct one is time. Okay, I want to see those traded into perhaps at the 2nd hour of London, or at perhaps 9:30 a.m. in New York time. Okay, so time is now more important than the price point itself, but at least I now have a reference point of where that pullback may come into. Okay, let's drop down into a lower time frame now, 15-minute, so that we can now see the different reference points on our chart. Okay, so we can see all the different markings that we have. Now, all I'm expecting is a pullback, right, into one of those areas. So this is essentially a pullback and then continuation back up to the high of the week. Okay, now what we don't know right now is where they're going to pull back into, but we have some key levels, and now it's going to be time that determines the entry, right? And so we can clearly see on the 1 hour chart that we have the high of the week, and that's what we're kind of targeting. Okay, so I'm going to take this range. Okay, this is another piece of analysis that you can layer on top of your technical analysis. I'm going to take that particular high because that's the high that took out the previous high on the left, and I'm going to pick that particular low because that's the low that took out all of the move above. Okay, so that's kind of our range on this move down. And what I want to do is I want to measure and I want to grade this move. Okay, so I'll take the same tool, I'll put it from the high to the low, and what I want to look at is where is the 50% of that range, because we're basically moving back up, we're retracing that move back up, and you can see where that 50% comes in at. Okay, it's actually close to our previous day high. Okay, so now we've got a combination of things that are kind of indicating to us where this turning point might be. Right, we've got the previous day high that is now very close to the 50% midpoint of that range. So let me tidy this up a little bit so we can clearly see these lines. So I'm going to just show you again on the daily chart. I'll turn off some of these markings so that the chart's not too busy. Okay, and you can see that is the high of the previous day on a daily. I'll change the color of this so we can see this on a lower time frame. Okay, so that's the high of that previous day. And if we jump back down to a 1 hour chart, we can see that there's that high from the previous day, and we can see that it is very close to the midpoint, not the midpoint, the 50% range of that entire move as we have retraced it. Okay, so that is a very high probability level that this pullback should come into. I consider this a pullback because we haven't really pierced the previous day high that much. Okay, we've only kind of just tapped into it. So that's why I consider this just to be a pullback. Okay, and essentially pullback and then continuation back up to the high of the week, right? That's what I am thinking, of course. So yeah, so that's that 50% from that high to the low. Okay, and so that's why I consider that to be the key level in the pullback. We now have a couple of different reasons why that is a key level. Okay, now obviously we could also, I could be wrong, we may come down into that wick midpoint. Okay, we could also come back down into the hourly gap. So it's all about time now, right? Do we come into one of these levels at a particular time? London, 2nd hour, or in the New York session, 9:30 a.m., equities open. That's what's now more important. Time is more important than price, but this gives me a reference point of where that pullback may occur. So if I do get the market moving to that level at a specific time, like at the key times, then with higher probability after seeing some reaction in price, I can be more confident in taking a long from that position for that pullback. Now, obviously, I could be wrong. Okay, we may not pullback. So you always got to manage your risk, okay, because we have taken out that previous day high. Okay, but I do believe that we are going to just have a pullback because the high of the week is still intact, and it's all a matter of where is that pullback going to come in at, okay, and what time. So I hope the video was useful. I will now talk with you in a future video.